Hi, my name is Deborah Sprang. I'm a tax return preparer. I've been doing tax return preparation for over 20 years. I passed a CPA exam, but I did not work under a CPA, and I went out on my own instead. I have earned the enrolled agent designation, an IRS approved credential, which requires me to take continuing education classes yearly to maintain my license. If you didn't watch my previous video aired on January 2nd, you can watch it too if you'd like. Today I'm going to talk about sources of income that belong on your tax return. Examples of income include the following: interest, dividends, wages, salaries, bonuses, unemployment compensation, capital gains, installment sale gains, pensions, and self-employed income, IRA distributions, Social Security benefits, military pay, clergy income, and farm income. I'm going to talk about interest and dividends today, followed by an administrative topic. And I'll be showing you an image of the forms 1099 INT, 1099 DIV, and Schedule B as I discuss these forms below, and I will show them at the end of the discussion as well. First, interest income. Interest can be earned on your bank accounts, certificates of deposit, or be bond interest. If you had a CD and you withdrew the funds before the maturity date, you will be issued a Form 1099 INT with the early withdrawal penalty shown in box 2, and that goes on the return. The amount of interest earned from the CD is shown in box 1 of the Form 1099 INT you received. If your interest and dividends are less than $1,500 combined, you enter the amounts directly onto lines 2B and 3B on Form 1040, and you do not file Schedule B with your Form 1040. If you had over $1,500 of taxable interest and/or ordinary dividends, you use Schedule B and attach it to Form 1040. Some situations where you use Schedule B are: number one, you received interest from a seller financed mortgage and the buyer used the property as a personal residence. Number two, you have accrued interest from a bond, which would be shown in box 1. Number three, you are reducing your interest income on a bond by the amount of amortizable bond premium. The bond premium is found in box 11 of Form 1099 INT. And number four, you are claiming the exclusion of interest from Series EE or I U.S. savings bonds issued after 1989. You may be able to exclude some or all of the interest earned on these bonds if you have qualifying higher education expenses for yourself, spouse, or dependents in 2022 on Form 8815. To qualify for the exclusion of interest earned, the bonds must be Series EE or I bonds issued after 1989 in your name, or if you are married, they may be issued in your name and your spouse's name. Also, you must have been age 24 or older before the bonds were issued. A bond purchased by a parent and issued in the name of his or her child under the age of 24 does not qualify for the exclusion by the parent or child. You also must have any filing status other than married filing separate, and your adjusted gross income must be less than $100,800 for single, head of household, or qualifying surviving spouse, and $158,650 if married filing joint. The interest from these bonds is found in box 3 of Form 1099 INT, and the excluded interest from Series EE or I bonds goes on line 3 of your Schedule B of your Form 1040, and you also file Form 8815 with your Form 1040. Number 5, you are reporting original issue discount, OID, in an amount less than the amount shown on Form 1099 OID. I'm not going to discuss further detail about the OID right now, but you can look it up as a topic on irs.gov for more information. Number 6, you received interest or ordinary dividends as a nominee. You are a nominee if you receive interest on Form 1099 INT that is in your name, but the interest belongs to someone else. Report the total on line 1 of Schedule B. Do this even if you distributed some or all of this income to others. Under your last entry on line 1, put a subtotal of all interest listed on line 1, and below this subtotal, enter in quotes nominee distribution, end quote, and show the total interest you received as a nominee. Subtract this amount from the subtotal and enter the result on line 2. Number 7, if you received any tax-exempt interest, including any tax-exempt OID, such as from municipal bonds, each payer should send you a Form 1099 INT or a Form 1099 OID. Enter tax-exempt interest on line 2A of your Form 1040 or 1040 SR. On Form 1099 INT, it's shown in box 8. Don't report any tax-exempt interest on line 1 of Schedule B. On Schedule B, you can list more than one payer on each entry space for lines 1 and 5, but be sure to clearly show the amount paid next to each payer's name. If it's a brokerage firm reporting interest you earned, list the name of the brokerage firm as the payer. The total for each payer goes in the amount column to the right of the page. A few words about ordinary dividends. Dividends are the most common type of distribution from a corporation. They're paid out of the earnings and profits of the corporation. Dividends can be classified as either ordinary or qualified. Ordinary dividends are taxed as ordinary income. Qualified dividends that meet certain requirements are taxed at lower capital gain rates. The payer of the dividend is required to correctly identify each type and amount of dividend you received and to report it to you on Form 1099 DIV. The total ordinary dividends are shown in box 1A of Form 1099 DIV, and the qualified dividends are shown in box 1B. Capital gain distributions are in box 2A, and exempt interest dividends go in box 12. Capital gains distributions are carried to line 13 of Schedule D, Capital Gains and Losses, which is attached to Form 1040. If your dividends are less than $1,500, you report the qualified dividends directly on line 3A and the ordinary dividends directly on line 3B of your Form 1040. If your dividends exceed $1,500, use Schedule B of the Form 1040 and report dividends on line 5 of this form as we've discussed. If you have a brokerage account with Fidelity or Merrill Lynch or other firms, most often interest on 1099 INT and dividends on 1099 DIV are reported with your stock transactions on Form 1099B issued by the brokerage firm. Next, I'll be showing you images of Forms 1099 INT and Form 1099 DIV and Schedule B again. The administrative item I wanted to discuss today before we end is about identity protection pins. An identity protection pin is a 6-digit number that prevents someone else from filing a tax return using your Social Security number or individual tax identification number, or ITIN. The IP PIN is known only to you and the IRS. It helps the IRS verify your identity when you file your electronic or paper tax return. Even though you may not have a filing requirement, an IP PIN still protects your account. If you are a confirmed victim of tax-related identity theft and you have resolved your tax account issues, IRS will mail you a CP01A notice with your new IP PIN each year. If you don't already have an IP PIN, you may get an IP PIN as a proactive step to protect yourself from tax-related identity theft. If you want to request an IP PIN, please note that you must pass an identity verification process, and spouses and dependents are eligible for an IP PIN if they can pass the identity verification process as well. The fastest way to get an IP PIN is by using the online Get an IP PIN tool. If you wish to get an IP PIN and you don't already have an account on irs.gov, you must register to validate your identity. The IP PIN tool is generally available starting in mid-January through mid-November. Or you may submit Form 15227, Application for an Identity Protection Personal Identification Number, to apply for an IP PIN if you, 1, have a Social Security number or ITIN, 2, have an annual adjusted gross income below $73,000 for individuals or $146,000 for married filing joint, and 3, have access to a telephone. Important things to remember about your IP PIN. Protect your IP PIN. Do not reveal your IP PIN to anyone other than your tax preparer, and you must use your IP PIN on your current or prior year's Forms 1040, 1040SR, 1040NR, or 1040PR SS returns you file in a calendar year, or the IRS will reject your electronically filed return. The processing time may increase for paper returns, which would delay any refund due to you. Your IP PIN is valid only for federal income tax returns, not for state returns. The states issue similar PINs. You may only use those PINs for state income tax returns. The federal and state PINs are different. The IRS will send you a CP01A notice with a new IP PIN each January by postal mail. Store the CP01A notice securely with your tax records. That's it for today. Thanks for watching. My contact information is available on the next slide. Contact me if you have any questions. I might be able to help you out. My fee for the personal return is $175, and the fee for the business return is $250.